we just take media monks, what would you say their competitive advantage would be in winning new content business?
Well, it's what I've said. I mean, it all stems around sounds rather glib, the faster, better, cheaper. The alternative way of describing it is speed, quality, value. Faster, as I said, is about agility, better about understanding, worth running through the companies: Google, Facebook, Amazon, Tencent, Alibaba, TikTok, depending where it goes, Apple, and Microsoft, Adobe, Oracle, Salesforce, IBM, SAP, Twitter, Snap, Pinterest, LG, Samsung, Spotify, Netflix,
Can't
Xiaomi,
the holding companies win some of this
JD.
business?
Well, they do. I was just talking in Australia. There were two big Adobe-driven pitches in Australia. We didn't pitch one of them. We weren't invited on one of them. On the other one, we won. Who do we win against? The incumbent was AKQA. So they can do. I'm sure, and they will try to. But as I say, their organization gets in their way.
And so when looking at driving a real competitive advantage as a network over the next 5 to 10 years as S4, what do you really focus on?
Well, those four things. Will, I mean, the ones what I have seen, I've said, focus purely on digital. It's half the business at the moment. It'll be 70% within a few years. Understanding the model, the Holy Trinity model, faster, better, cheaper, and the industry structure. Those are the four things, and that's what applies to our content practice around Media Monks and our data and digital media practice around Mighty Hive.
From a capital allocation point of view, it's obviously allocating this cash flow to grow plus issuing equity for earnings for new managers.
Well, I mean, our structure remains the same. We don't pay a dividend at the moment. We've said that we'll probably pay a nominal dividend in due course, but the rates of return that we get, the capital allocation process, where can you get the better return? And better return is by investing in our business. For example, our Epic investment in Fortnite investment in India in the new technologies. Our production centers in Buenos Aires or in New Delhi or Kazakhstan or Ukraine or whatever it happens to be, and those are data centers, data and analytics centers, and obviously investing in M&A, and the structures of our deals remain the same. Basically, half shares, half cash, no earnouts, because that creates fragmentation. That's part of the problem. I mean, WPP will probably all go off and buy companies, and they'll have people who want to sell, which is a key thing. I mean, you don't want people to sell. You want people to buy in or sell into your company, and you want people to continue. It's no good having companies drop dead after the earnouts.
With the land and expand, now you'll get into these bigger accounts like Mondelez or Mini. How far can you go? Back to the question around, going into different parts of the corporate structure. And
well, we started with brand awareness in 2018, the last half. In 2019, it was about after going through awareness, brand trial, and then trial in 2019, and then we moved to conversion at scale, the 20 squared objective around 20 whoppers, which actually, if we didn't have a cent or a dollar of revenue, and those would mean that we'd be recreating $400 million of revenue. But a lot of these clients are clients we work with, so we've identified the top five. We've identified another five where we're running at 5 to 10 to 15 million dollars of revenue a year, and then we've identified another 10 where we think we have potential. So where we will think we will get. So over the next couple of years, we want to get to 20 clients of 20 million more or revenue or more. So the answer is demonstrate. So priorities for next year, obviously consolidating our organic growth and growing more whoppers. Number two, unifying the business even more strongly through rebranding, which you'll see shortly when we launch the rebranding. And then thirdly, continuing to expand our offer by broadening our capabilities within the three pillars of first-party data, digital advertising content, and digital media.
in the long run, another pillar?
No, I think we'll stick to those three. I mean, we may move up the funnel strategically. We may do more in the way of systems integration, but that's really within the three pillars that or three areas that we're interested in. The two pillars as we've created them: content and data and analytics and digital media.
Last question, and biggest challenge you're facing?
I wouldn't say it's a challenge. It's an opportunity. It's the conversion at scale. We have to demonstrate these with this model works at scale. We've already won business at scale. Now we have to do it, not just show that it works in those cases, but go well beyond.